They've got a few things on their plate. One is they're looking to do a big fiscal expansionary budget that typically leads to a stronger currency because you're boosting your growth. But they usually need the central bank to raise rates in response to this. And that's the problem. There's a slight political lean in the market's pricing for the BOJ, with the new prime minister, the first woman to ever lead Japan in that role, making clear her views in the past about the BOJ being foolish to raise rates. And she's not saying the same now, but it's difficult for the yen to strengthen, Tom, if you've got a prime minister who doesn't want you to hike.
My qualifications are, Jordan, is I've seen the Shogun on Hulu. I've seen Shogun twice.
Yep.
Okay, so I'm ready to talk about Japan. But Robbie Feldman, as you know, Jordan, over at Morgan Stanley's been on the watch for 30, 40 years. He would take it back to the agricultural lobby in Japan and the power of rice as a staple commodity. Is that stereotype still true?
I think they've shifted back to that. If you look at the sort of administrations, they've put together this new cabinet, and the focus will be more on supporting farmers once again for the LDP. So they have shifted to the right on cultural issues in a big way. And that's kind of why you had a bit of a furore about who would the PM be able to get over the line in terms of the votes she needed because of this shift to the right culturally. So, for example, this past year, the Japanese had extreme rice inflation. They had fears of a super earthquake, which didn't actually materialize, but they also had droughts the previous summer and poor weather. And the government, rather than allowing rice prices to be high, and that would support farmers, of course, they were actually releasing rice reserves to try and lower the price, because a lot of the inflation that Japanese consumers faced was from food. And it really weighed on them in the polls as well. The LDP suffered in the elections this year because of the high food prices.
Jordan Rochester with us. I want to frame this out, folks. You look at dollar yen out to 153 is just shocking. And euro yen taking away the dollar, comparing euro to yen, is stronger euro, almost to a print of 178. In the game, Paul, those are wow statistics.
Wow statistics there. So, Jordan, we're going to get some U.S. inflation data today. What do you think the markets are looking for today?
Well, you've got a few things. We can look at what the economists look for, or we can look at what the markets look for. The economists are looking for a sort of 0.3, 0.4 handle for the month-on-month headline. That's the skew is to the downside, but 0.4 is the sort of where things are leaning. But the markets are pricing a higher number than that. So we can strip it out of the inflation curve, and a 0.48% month-on-month for headline. That's a significant number. That's pretty much 6% CPI annualized if we get that. I think the risk reward is that actually we'll have a lower number than that. Maybe the economists get it right for once. We'll have to wait and see.
Paul, is not jargon?
Yeah.
Is
okay.
that zero?
I like it.
That's like what Tottenham did.
I like not. I like
Zed, very
like
good. That's what not is sort of what Tottenham did against Aston Villa. It was ugly as well. Continue.
So, Jordan, I'm just looking at, the dollar here seems to have stabilized over the last couple of 3 weeks. It's obviously we're still maybe 7-8% below the peak earlier this year here. What's going on with the U.S. dollar, do you think?
Anyone who comes on your show and tries to express confidence in a foreign exchange view to you is probably fooling you. It's been the most difficult market since Liberation Day. So what happened on Liberation Day is you had huge amounts of sort of dollar debasement trades taking shape. You had huge amounts of hedging dollar exposure by European and Asian investors. And the usual framework for telling you where I think the dollar goes, which is an interest rates framework, Fed versus ECB rate hikes, that framework's broken. The yen should be way stronger. The euro should be much stronger. All these sorts of frameworks aren't working. What's happened in recent weeks, though, is we've seen the sort of long euro, short dollar theme really lose some steam. And apart from the strong PMIs in Europe this morning, overall, the data out of Europe has been cooling off. And that had been weighing on the euro to some extent. But there's also a peak amount of US pricing for how far can these cuts go. So the market's hovering around a 3% handle for where the Fed will get to in terms of its Fed cuts. And so it's become a bit more difficult for people to put on sort of big sort of pot shots as to where euro dollar will go next. I think in the short term, euro's going to weaken, the dollar's going to strengthen because of the sort of data surprise story for the euro area. I think overall it's going to be negative despite the PMIs. But I also think everyone's short the dollar now.
Really?
But that will play out in November. And when we get to the December, there's a strong seasonality for a weak dollar. And I think that will probably kick in. And then we start that sort of euro dollar going back to 120 to 125 story for next year based on the German fiscal stimulus. But like I said, anyone who's expressing a strong conviction in FX is fooling you. It's been a very difficult market to trade.